Hello guys, welcome to the Solid as a Stock session. Hopefully obvious what we're going to be covering today. We are looking at stocks. So I can see the chat boxes. I'm just making sure that I have access to all of them here so I can see you guys as you say hello and as you ask questions. Now, as always, we will always ask for this, and the reason that I ask you guys to talk to me in the chat box, it's not because I'm lonely. I would like to see some interaction from you guys, because if you have questions, sometimes you might feel a little bit shy to ask a question, but if you have a question, most probably somebody else has that question too. So it helps if you ask a question that I can then explain, that somebody else might be able to come to later on and answer that question for them. So by all means, any questions you have, let me know. Any particular stocks that you want me to look at, or parts of the methodology that you want me to go into, again, by all means, let me know so that I can make sure that these sessions are for you and that you get the most out of them. And again, other people learn from it as well. So please ask questions as you have them. And say hello as well. It's nice to know who's there, who's watching. So just quickly before we start, my name is Becky. My email address is becky@traddictiv.com, which is down here. And we have support@traddictiv.com as well. So you can email, if you're watching this on recording or something like that, if you have any questions, you can email those email addresses. And we also have disclaimers that we need to cover. That should be, there you go, they are there being highlighted on the top of the screen. Now, of course, it's important to understand disclaimers, there we go, from a legal perspective, but also to, of course, understand that these videos are demonstrations and don't necessarily indicate results. So before we get started, just to say, as I said about asking questions, ideally, I'd like you guys also to ask questions. If I come out of here, it might be easier to do that and close that. I'd like you guys to ask questions at this link, which is tradewithufos.com/Becky. Now, the reason that I want you to do that is because if you do it in this place, once you've got a free Trade with UFOs membership, if you ask questions in this place, then other people can see them, and when we answer, other people can see the answers. So of course, emails are just between us and you directly, but these questions and answers are for everybody to see. So it means people have questions again that other people might learn from. It's also good as well because once they've been posted publicly, we can then use that perhaps to do a session on it, realizing that people have that question and people want the answer to it. So we can then build a session out of that and again help more people with that answer. So ideally you'd come here to ask questions, so please do so. Okay, so stocks, this is what we're looking at today. Now, first things first, let's have a look at the charts and see what we did last time, see what happened last time and what happened from it. Now, the way we do these sessions, by the way, is that ideally what we're doing first of all is we are going to be looking at what happened last time, what we would have done, how we would have managed the trade, did we have a loser or a winner, or how that worked. We're then going to look at new opportunities by understanding the context of the market, running scans, taking suggestions from you guys to look at new trades. Now, we are currently streaming in multiple places. So we're streaming on YouTube, on Facebook, LinkedIn, other places as well, can't remember them off the top of my head, and within our closed coaching community. So obviously in our closed coaching community, people are paying to have access to that. And we're also doing them for free on YouTube. So the way we balance this is that after we've placed at least one trade, we'll cut the stream to the free live streaming and we continue in our closed coaching community. So if those that are part of our closed coaching community have access to more of our time in a closed environment. But for those of you that are watching on the free platforms, you still have access to us at least placing one trade. So hopefully that makes sense. That's how we're going to structure this today. Now, this was a trade we put on last time. It was on the diamonds, so on an ETF for the Dow Jones Industrial Average, DIA, hence diamonds. That's why we call it that. Now, what we had here is we placed the trade around about this point. The black line was our entry, the red line was our stop, and then we had a green line here. That was our first target, and then our second target was a trailing stop. So what would have happened here? As we saw, very soon after we put the trade on, price came in, moved away, hit our first target, and then came back against us and stopped us out here. So what that means is that we would have had overall a break-even trade. So we made half the trade and then we lost half the trade. So overall, we did nothing. We didn't win, we didn't lose. It was a break-even trade. That's why we place our safety target here, so that if we have situations like this where price goes a little bit in our favor and then against us, we don't lose anything. We're protecting ourselves by taking some of our profit quite early on, in this case 1-to-1, so that we can protect ourselves from the downside. So that's exactly what we did here. That's exactly what happened here, is that we hit 1-to-1, then we hit our stop. It was a break-even trade. Didn't win, didn't lose. So that was the last trade we put on last time. So I'm just going to delete that off the chart this time. Now we want to look at new opportunities today and see what other stocks we can be placing trades on. So first things first, what I want to do is actually come to the FX Street Economic Calendar. Now the reason I want to do that is because I want to see if there is going to be a lot of news that could impact us on our trades coming up. So what I'm going to do here is choose the date range that I want to look at. So we want to look from today till, let's say, next week. So today, Friday the 30th of July, until next week, Friday the 6th of August. Click apply. What I'm seeing here is all of the news that could be coming out on all of the markets. So I'm going to filter this and be a little bit more specific. I want to look at United States only. So I'm going to clear it all first. Click United States, because we're going to be looking at US stocks. So it's kind of less relevant what's going on in other parts of the world there. And I want to filter by only high impact news, meaning the news that's likely to create volatility in the market. Now, volatility is not necessarily a good or a bad thing. It exists. We need to be aware of it. Because if we've got high volatility in the markets, we might get stopped out when we otherwise wouldn't. We might also hit our targets sooner than we otherwise would. So it can have good or bad effects. Some people will embrace volatility. Some people will keep away from volatility. We tend to be a bit more on the conservative side and at least say, if there's a lot of news coming out and a lot of volatility that we expect, perhaps we'll at least reduce our risk percentage or place less trades than we would normally. Now, searching for that, we can see here that it's only Monday the 2nd of August at 2 p.m. Eastern time. I think it's under Eastern time. It might be GMT. Am I looking? Yeah, it's GMT. So this is UK time. So it's actually going to be earlier in the morning in the US that we have high impact news coming out on Monday. So perhaps it might be that you place some trades today. If they don't hit by the end of today, you cancel them and you replace them after the news on Monday. That might be how you manage that. So with that in mind, let's take a look at the charts. So what I'm going to do is come down to TradeStation, and I'll use TradeStation to run scans and look at opportunities that we have. Then we'll look through some ETFs. I'll always keep my eye on the chat boxes if you guys want me to look at other specific stocks or other specific ETFs that we can take a look through. Now, first things first, before we do that, I want to look at the market as a whole, and I'm looking at the ES, which is the futures contract for the S&P. For those of you that might be new to stocks and don't really know what that means, basically I'm looking at a representation of US stocks as a whole. Basically, that's what I'm looking at here. Now, the reason I want to look at that is because if the market as a whole is going up, the stock market as a whole is going up, and then I look at an individual stock that's also going up and I trade that, then the correlation of the stock itself as well as the stock market as a whole both going in the same direction is added probability. It's not 100% needs to be that way. It's not a definite part of our process. For me, it just helps me to filter a little bit more when I first start my analysis, to be looking at something that makes a little bit more sense to do, because I'd have correlation on my side. So I check first and come down here and say, for my bigger time frame, which in this case is a daily time frame, I have a thick blue dot there on my auto climate. So basically I have probability upwards on a daily chart for the S&P. So for the stock market as a whole, probability upwards. So it makes more sense for me to look at individual stocks that have probability up for me to then go and look at placing those trades. So hopefully that makes sense. Now, I've run a scan already. I ran it just before we started and it came up with one opportunity that we might want to check out. Now, by the way, if we run these scans and they come up, that's not to say that we definitely place those trades. It's just filtering things for us to say that makes more sense for you to look at, not go and place a trade on it. So we have added things to our methodology that are going to help us with this to place a trade. Now, same thing applies as well. My mouse was just being strange there. Same thing applies as well, that if we don't have stocks on that list, that we can't go and look at other stocks as well. We can, but again, it just helps us to filter down, be a bit more efficient with our time. Now, in this instance, we don't actually have a trading opportunity. I'm going to double check here what filter I'm using. I'm just going to try this one instead, see if that changes anything, just to try and cheat a little bit there. I'll change that back. I'll explain in a second what I just did there. So, first things first, the reason why we don't have an opportunity here is because we don't have our variables lining up in the right way. Any trading methodology that you use, whatever you're trading, whatever process you go through, what you're doing is you're looking for variables to line up for you to say, yes, I placed that trade. So if you're somebody that trades stocks or invests in stocks based on the fundamentals, you're going to be looking for certain criteria to be hit before you go and buy that stock. Maybe it's the earnings, maybe it's who the CEO is, maybe it's the how it is doing relative to the sector. Maybe it is, if it's a particular stock selling a particular product, it's how well that particular product does. Whatever you're looking at, you're looking for fundamentals to line up in a certain way before you go and risk your money on a trade. If you're a technical trader, then you might look for this line to cross this line, or this pattern to do this, or that to break out of there. So again, you're looking for variables to line up before you place a trade. We do the same thing. We're still using variables to line up to place a trade. We're just using particular variables in a particular way. So for us, the first variable, the first thing to look at is our auto climate. First things first. So the auto climate helps us answer this first question of, should I buy, sell, or do nothing? That's question number one. And whatever trading methodology you have, ask yourself this question. When you're looking at a chart, when you're looking at a stock, when you're looking at a currency, should I be buying it? Should I be selling it? Or should I be moving on to a different opportunity? Should I be leaving it? In this case, because we have a thick blue dot on our auto climate, and auto climate helps us answer that question, thick blue dot tells us we should be looking to buy. Great, that answers the first question. We should be looking to buy in this case. However, we have question number two, which is, if I buy, where? Or if I sell, where? In this case, it's going to be that first question, isn't it? If I'm buying, where am I buying? Again, we're using technology to help us with this as part of a very structured methodology. If I buy where? The answer to that question is where a UFO meets the EMA. So now I've just said letters at you. So again, if you're new to this, it might be confusing. Our UFOs, that's what these guys are. We've got this little thin red one up here, and we've got a thicker green one down here. These guys, UFOs, stands for unfilled order. Essentially, where are the buyers and where are the sellers? If we want to buy where there's lots of other buyers, much more likely to go in our favour and push price up. If we want to sell where there's loads of other sellers, much more likely to push price down. The only reason price can ever go up is if you have more buyers than sellers. The only reason price can ever go down is if you have more sellers than buyers. So if we're deciding to buy and sell, we want to be with those bigger stacks of buyers and sellers because we're much more likely to beat the opposite and push price in that direction. So with that, if we were looking to buy, then the answer should be amongst the UFO, where buy orders are. This is where the buy orders are. This is where we want to buy. That's quite far away from current prices, the closest UFO that we have. Now the issue is that, remember I said the answer to this question is where a UFO coincides with an EMA. So we know what UFOs are now. Our EMA comes over to the bigger time frame and is this little grey number there. An EMA stands for exponential, just about fits, moving average. And an EMA, if we take the last two letters there, moving average. Essentially, it's a line that moves through price, showing you what the average is of the last X amount of candles. In our case, we're using a 9-point EMA. So it's showing you the average of the last 9 candles. It's exponential because it puts more weight on the more recent movement. So we use a 9-point EMA. Now, why do we care about that? The EMA is a price at which a lot of people around the world, a lot of retail traders around the world and fund managers around the world will buy and sell at the EMA price. So if price is here and the EMA is here and price moves down, and hits the EMA, very common practice is to then buy at that price. Loads of people do it all over the world, which means buyers are coming in. If price is there and the EMA is here, so it's above price, and then price moves up and touches the EMA, then people will sell here. So it's just a very common practice that you buy if price meets the EMA and the EMA is below price, and you sell if price meets the EMA and the EMA was above price. It's a very simple, very commonly used strategy. Now we care because if we have buy orders here, because the app has told us there's buyers here, and the EMA happens to also be inside this, then we've got buy orders from the UFO and buy orders from the EMA at the same price. So we've got the context of an upwards climate, buyers, we've got buyers at the UFO and buyers at the EMA, and then we're buying. So we're buying where there's lots of buying, much more likely to push price upwards. Now, it depends how strict you are. You might just buy at the EMA and ignore the UFOs. You might just buy at the UFOs and ignore the EMAs. You might have different ways that you do this. For us, our structure and our methodology is we will only buy where we have a green UFO that coincides with the EMA value from the bigger time frame. We will only sell if we decided to sell if we have a red UFO that coincides with the EMA value from the bigger time frame. In this case, the EMA value is 45.42, which is here, roughly here. So we have an EMA at this value and a UFO all the way down here. They're not coinciding, therefore no trade. So I know I spent a little bit of time there explaining that, hopefully for those of you that might be newer to the strategy, or maybe didn't quite understand that if you've been doing it a little while, hopefully that makes sense as to why we need those two things to line up and why in this case, no trade. Now what we'll do is we'll cycle through and we'll have a quick look at some of our big stocks, our FANG stocks, and just see what opportunities we might have here. Now I looked at Facebook first. If we come over to our list here, so we'll do them one by one. Now Facebook, first things first with this one, we look always, question number one is do we buy, sell or do nothing? So the first place we look is the auto climate. That tells us what we do. That tells us whether we buy, sell or do nothing. In this case, it's telling us to do nothing. We have a thin dot on auto climate. A thin dot on auto climate tells us not enough probabilities either way, do nothing. So we do nothing. We move on to the next market. Saves us so much time of going and doing a whole bunch of analysis and measuring this and measuring that and looking at it and double guessing ourselves. The tech does it for us. The technology says, and same with Apple, thin dot, not enough probabilities, do nothing. Change time frame, change market. In this case, we're going to be changing markets before we change our time frames. Amazon, let's click on that. So with Amazon, we have an interesting situation. 5, 7. Okay, so no trade on this one. Close, but no trade. I'll explain why. So let me just unsquidge price a bit. We have thick red dot, probability downwards there. So if the auto climate is a thick red dot, it's probability down. If it's thick blue, probability up. If it's thin, probability nowhere. There's only 3 answers you can get from auto climate. So in this case, it's telling us look to sell. Now, if we're looking to sell, we want to sell where there's UFOs, where we have our EMA. Now, our EMA is at 3,572.91. So what I'm going to do is just draw that on the chart so we can see where that is. 3,572.91. 90, close enough. So our EMA value is down here and our UFOs are here. So that tells us we are not close enough. We are not correlated again. We do not have a UFO and an EMA at the same price, and so we will move on to a different opportunity. So let's have a look at Netflix. And again, we'll go through these. We'll literally just go through them one by one, the FANG stocks and the ETFs, unless you guys have anything particular that you want me to look at. Let me know in the chat box. I'll do that there as well. Now with Netflix, similar situation to other ones we've looked at. Thin red dot, probability neither way, do nothing, move on. Very quick answer to a very quick question. Google, let's take a look at Google. So Google has a thick blue dot, probability upwards, meaning we should probably look to buy. Now the EMA value isn't quite lining up, so let's draw this on the chart. Just grab a horizontal line, double click it, and then I can type what the EMA value is and see where it lands. So the EMA value here is 2650.25, and that is not quite lining up. Do you know what though? In this situation, what we might do is place a trade on Google, and I'll tell you why. Because if our EMA value, let's use the same colour here, if our EMA value is here, bearing in mind EMA stands for exponential moving average, meaning it moves. As price moves, so too does the EMA, because it's tracking the value of price. So as price falls, our EMA will also fall at a slower rate, but it will fall. So it may be that these two things happen to coincide within our UFO. The EMA is close enough to the UFO and far enough away from price that there's room for that to happen. So what we would do is we could either place the trade. In fact, what I'll do, I'm just going to draw lines around this real quick. I'm going to leave that there for now because you have two options here. You can place the trade and check on it regularly and cancel it if they don't line up by the time it gets there. Or you can not place the trade and set an alert to then let you know as price comes close to that UFO. You've got an alert to say, right, now price is here, for example. Now we want to see where the EMA and the UFO line up and place the trade real quick if we want to do that then. What I'm going to do is, because it's not exactly lining up right now and it's kind of an anticipated situation, I'm going to have that as a backup in our back pocket as I go through other opportunities. If we have another opportunity that works out as a good one, we'll place that one. If we don't, we'll come back to Google and place this as an anticipated good trade. So hopefully that makes sense. Checking the chat boxes there as well to see if you guys have any questions. By all means, if I say something that doesn't make sense, tell me and I can explain further. So we're looking at this next market here, which is Alibaba. Just waiting for that to load so we can see what we have as an opportunity here or not. Now, first things first with Alibaba, as it's loading, we have a thick red dot, probability downwards. We should look to sell. Then we move on to question number 2, which is where should we sell? It's currently loading the data to give us an idea. Now, again, this is a situation where it doesn't line up. Our EMA value is 199.57, which is, I'm just going to quickly do that, round about here, right? Round about there. So it's not close to a UFO, a red UFO. As price moves up, it's likely to cross the EMA before it gets to the UFO, so not even something to anticipate. Move on to the next market. So let's have a look here. We're looking at Baidu. I think that's how you say that. Baidu? Baidu? Baidu. I perhaps pronounced that wrong, but we know what we're looking at. We have a thick red dot, probability to the downside, meaning we should be looking to sell. Our EMA value is 169.05. I think it's going to fall just outside of this here, and we're going to miss it by a couple of points, but let's have a look. That's our EMA value, yeah, just past this. So remember, the EMA moves with price. So as price moves up to this UFO here, our EMA will also move up at a slower rate, but it will move up, meaning it's moving further away from the UFO, not closer to it in this instance. So not a trade that we want to place or anticipate. Move on to the next one, NVIDIA. We have a thick blue dot here. We're actually currently at the EMA. So thick blue dot, probability upwards. We have UFOs here, but the EMA price is pretty much exactly where price is right now. So again, UFO and EMA not lining up, move on. Now again, you can be less strict on this and say, great, let's trade just at the EMA, or great, let's trade just at the UFOs. Fine, no problem with that. The less strict you are, the more trades you have, the more trading opportunities you have, but the less probable they are. Now you could say, as long as they're probable enough to be overall profitable after 10, 20, 30 trades, then I don't care. You might say, I don't care if they're probable enough to make me profitable. If it means I have to go through 5 losses in a row, I'm not willing to do it. The higher the probability, the less the opportunity, but the more likely it is that the trades you place win. The less strict you are, the lower the opportunity, but the more likely it is that the less strict you are, the more opportunity, and the less likely it is that your trades win. So you've got to balance those things. For us, we're stricter on it. Now with this, we have, again, not working out because we have, yes, thick blue dot, probability upwards. Our EMA value is 663, which is going to be around about here. So again, not lining up with our UFO and not close enough to anticipate that it might. Let's look at the last FANG stock here, which is Twitter. We'll then take a look through the ETFs. If we can't find anything, we'll come back to Google and we'll place that one. So with Twitter, we have thick blue dot, probability upwards, UFOs miles away from our EMA. So thick blue dot, EMA is 69.53, so around about here. And first UFOs all the way down here. So we will ignore that one and move on to the next. So we're now looking at ETFs, exchange traded funds, baskets of stocks in a sense. So let's have a look at these and see what we have. So this may be another situation where we leave it there to anticipate. So the reason I'm saying that is because we have a thick blue dot with the SPY. So it's the ETF for the S&P 500. Thick blue dot for the SPY. Our EMA value is 437.79, which is here. There we go, it's here. Now, as price moves down, again, it may be that the EMA also moves down and it coincides at this UFO. At the moment, we'll leave it as it is. I'm just going to draw lines around it just to remind me as we filter back through. If I don't remember off the top of my head, I'll see the ones I've got lines on are the ones we're going to place as anticipatory trades. But we'll move through first all of these and see whether we have a better opportunity. Okay, so again with this one, this is the Qs. This is the ETF for the NASDAQ, so tech stocks. We are looking at a thick blue dot, probability upwards. We have our EMA is basically at where price is right now. Again, not coinciding with the UFO. Move on to the next opportunity. Let's have a look at the diamonds. Off the top of my head, yeah, I was going to say off the top of my head, I remember it being a unconfirmed or an unconfirmed climate. So we move on from that. Climate's the first question. The answer is not enough probability. Don't even bother looking at anything else. So we move on. Let's have a look at the next one here, which is the Russell IWM. Again, we have an unconfirmed climate, thin dot. So we move on. So it might be here that we have to filter back to Google and have a look what we have there. What we'll do after that, for those of you that are in the closed coaching community right now, once we put on the Google trade, or a trade if we find it here, before we cut the stream, we will then continue and look for trades on different time frames and see if we can find them there. So this situation, similar again, this is TLT, which is the Treasury ETF, and we are looking at a thin dot, not enough probabilities, move on. We'll move on to XOP, which is the ETF that tracks gold, an ETF that tracks oil. We'll look at gold in a second. So with this one, right, with this one, it looks like we have a trade. So let's put this one on. This is a thick red dot, probability downwards, meaning we should look to sell. We want to sell where we have a UFO combined with the EMA. The EMA is 83.74. So if I double click this and do that, 83.74, it is just within our UFO. So as price moves up, our EMA will move up a little bit, but it's still likely to combine somewhere in between this UFO. So that's going to be the trade that we place. So what we'll do now is we will go to TradingView to finish this off. So this was XOP. We want this to be stock. XOP. I'm finishing it off on TradingView, one so that we can use two different platforms depending on what you guys are used to using. So that's that. But also I want to make sure that we can put this trade on relatively easily from a process perspective. So I personally have a TradeStation account. I connect it to my TradingView, place the trade through TradingView that then routes to TradeStation, because I find TradingView to be easier when it comes to order placement. So that's why we do it this way. Now we're looking at very slightly different data here on TradingView than we are on TradeStation. They are linked together, but for some reason I have an issue with mine where it shows me slightly different data from a slightly different exchange. Very, very similar. So we'll use the data that we have here, and we're going to use this UFO that's here, this red UFO. Now they look slightly different on TradingView than they do on TradeStation. Doesn't matter, as long as we're highlighting a sort of similar place and the numbers are pretty much the same. So I've just drawn these lines, and I know it says Fib retracement, and for those of you that use Fibonacci as a trading tool, you're going to hate me for this. I've customized it to use it as a drawing tool, just because it means I can draw parallel lines at the same time. So sorry for not using it as it was intended, but that's how I use it. So what we're going to do here is we're going to take the numbers that are given to us by the UFOs to be able to put these numbers in. So we have 83.78 is going to be the entry, and the stop is going to be, the numbers actually moved a little bit, it's up here and it's a little bit confusing, 85.47. So I'm going to put that in 85.47. I'm now going to add 10 cents of wiggle room. So it's going to be 85.57. When I click OK, you'll see that line moved a little bit. So I draw the lines randomly on the chart, or as close as I can, and then double click them and type in exactly what I want those lines to be. So this is now going to be, my entry is at the black line, my stop is at the red line, and then we're going to put in our targets. Now, if I come over here to order panel on TradingView, it obviously makes it, to me anyway, easier to place than if I used TradeStation. So I'm going to click sell, and what I'll do here is just put in 83.78, which is the 83.78, that's our entry. Our stop loss is going to be 85.57. So now it's already worked out for me the pips, meaning the smallest increment of price, right? So it's 179 cents in this case, because we're trading a US stock. So it's 179 cents or $1.79. For one share, I would be risking $1.79 with this trade. Now, firstly, what I want to do is I want to make sure on this trade that I'm risking $100 overall. So I'm going to be placing two targets, which means $50 on one, $50 on the other. So I'm going to put in 50. That's then worked out for me how many units, how many shares I would need to trade in order to risk $50 on this half of my trade. My target is going to be very easy. I'm going to click take profit, and I'm going to type in the same amount of pips, same amount of distance that I have between my entry and stop. So that way I'm risking $48.33, which is the closest I could get to $50, to make $48.33. I'm risking one to make one. The number here is 1 to 1, that's my trade. So if my trade is 1 to 1, all I'll do is just double check that I've got all of that in, and I'm going to then just press sell. That's now gone in, and what I'm going to do as well is draw a line so that it's easy to come back and look at next time. The number for that was 81.99. Works out the price for me. So now I've got an entry, a stop, and a target that's 1 to 1 away. Now 1 to 1 is fine, but it's not necessarily going to make you a lot of money. You'd have to do a lot of those trades and be right on a lot of those trades in order to make money. So what do we do about that? Now we want to take advantage of as much of this chart as we can and take as much profit as we possibly can based on statistics. So what we're going to do here is understand, first of all, we are placing a sell trade because we're in the context of a downwards climate. So on the daily chart, price is pushing down. We got in on a 55-minute chart, or we will get in on a 55-minute chart because we had a UFO that combined with our EMA. So the only thing really that can stop sell orders now, so we've got sell orders from the climate, sell orders from the UFO, sell orders from the EMA. The only thing that can stop all of those sell orders is a lot of buy orders. Now it might be that new buy orders come into the market and push price upwards, or it might be that price continues down until it hits an existing big stack of buy orders. So we want to get out before it hits that. So the number for that, the top of this UFO, is 80.50. I believe it looks like that is 80.50. So I'm just going to draw that in on the chart and put that in there, 80.50. And that is going to be our second target. So I'm just going to put a little text box in here. So today is the 30th of July. I know you guys might do 7:30, but I'm doing 37. That's how we do it, short. And I'm going to put the same thing in that we did before, 83.78. That's our entry. Our stop loss, it is remembered at 85.57. Remember, I want to risk as close to $50 as I can, so I'll put in 50. It will work out for me how many shares I need. And then in this case, I'm just going to put the number in. I'm going to put the price in, which is going to be 80.50. That's now worked out for me. That's a 1.83 to 1. So overall, if I'm right on both of these, click sell. If I'm right on both of these, if price comes up, hits my entry, and then moves away and hits both of my targets, I'll make 1 to 1 here and then 1.8 to 1 here. So overall it's going to be 1.4 to 1, 1.3 something to 1. If it moves slightly in my favour, like the example we had when at the very start of the session, it might hit our safety target and then move against us. Then it's a break-even trade. Or it might go right against us and stop us out. So to me, I see it that of the 3 possibilities that could happen if we don't manage this trade or do anything else and we just let it do what it does, it will either go somewhat in our favour and then against us and stop us out and we'll get a break-even trade. It will go straight through and stop us out and we'll get a losing trade, or it will hit both targets and we'll make a profitable trade. So of the 3 things that can happen, 2 of them involve not losing, which is why we prefer to do it this way and use our safety target in that way. So that's the trade that we've put on, and that's where I'm going to stop streaming to Facebook and YouTube and things like that, and we'll carry on in the closed coaching community having a look at some more examples, some more trades that we can place. If you have any questions about what we've gone through today, email me, or you can go to tradewithufos.com/Becky. Get yourself a free Trade with UFOs membership if you don't have it already, and then come down and ask the question here so that I can answer it here and other people learn from that answer. So hopefully that was helpful, guys. I'm going to continue in the closed coaching community so you guys don't go anywhere. Everybody else on YouTube and Facebook and things like that, I will see you next time. Have a great weekend. Have a great end to your trading week, and I will see you in the next session. Those of you that are waiting on the closed coaching community, give me a sec just as I cut the stream. It takes a couple of seconds for me to unsync it all.